All right, well, it's 12 o'clock noon here Central Time, and hello to all the listeners out there. Welcome to our July Hoard's Dairyman monthly webinar. My name is Kylie Anderson. I am the editor of Hoard's Dairyman magazine. I will serve as your host for today's webinar. And if you're listening to the presentation live, you have access to the PDF of the slides that can be printed. The handout can be found in the handout section of the GoToWebinar control panel. In addition, if you have questions for our speakers, you can type them into the question section of the control panel and we will address them following the presentation. Today, we welcome Abbi Prins and Corey Geiger to the Hoard's Dairyman webinar series. Both work for CoBank, which is one of the largest private providers of credit to the U.S. rural economy. The bank delivers loans, leases, and other financial services to agribusiness, rural infrastructure, and farm credit customers in all 50 states. Abbi is an industry analyst for CoBank's Knowledge Exchange Research Division, primarily supporting dairy and animal protein sectors. Prior to joining CoBank, she worked at Riverview LLP Calf Ranch in New Mexico, at Land O'Lakes in Wisconsin, and her family's dairy feed and manure equipment manufacturing business in Tulare, California. She earned a bachelor's degree in animal science from Washington State University and a master's degree in animal science from the University of Minnesota, where she studied economics, commodity marketing, and statistical analysis. Corey Geiger is no stranger to the Hoard's Dairyman webinar series. He's an economist for dairy production and processing. Prior to joining CoBank, Corey worked here at Hoard's Dairyman as managing editor. He has deep dairy knowledge of the industry, ranging for decades, from policymaking to international trade to federal milk marketing orders. He was elected the 65th president of the Holstein Association USA and serves on the board of directors for World Dairy Expo. He holds a bachelor's degree in dairy science and ag economics from the University of Wisconsin-Madison. Abbi and Corey, welcome to the webinar, and I look forward to hearing more on your presentation titled Market Dynamics Continue to Shape Milk Checks.
Thank you, Kylie, and Abbi and I look forward to presenting today. We're having slight technical difficulties, so you won't see Abbi's bright face, shining face, but let's get started in the conversation here on the dairy markets. So the big picture here is that dairy is dynamic and growing. If you look at Circana sales data in the past year, dairy is a $77.8 billion category. And for perspective, what does that mean? Dairy is the largest category in all of grocery. And if you put alcohol together, and we're talking wine and beer and all the spirits, think bourbon and brandy and all that, alcohol is number two. And it's intuitive because dairy is the world's largest refrigerated supply chain. We're cooling milk from the farm through the delivery to the processing plant, and then once it's into retail. So dairy sales were up 3.3% collectively in the United States and from 2023. And again, it is, we're harvesting milk every day. It's outside of eggs, there's not many commodities out there in agriculture where we're constantly processing dairy. So we're gonna go through four categories today. We're gonna talk about production and processing, consumer demand. Abbi's going to go into that, and Abbi and I will tag team on cattle inventory, and then we'll look ahead here, short term and near term. So let's go right into production and processing. Dairy, milk matters more than cows when measuring growth. So a number of times I've gotten to speak to livestock groups, predominantly in the beef sector, and we talk a lot about number of beef animals. But in dairy, we're looking at hundredweights. And I think, in dairy, it's intuitive, those that are listening, that we're talking about that. But if you look at dairy cow numbers from 1999 to 2024, the last 25 years, cow numbers are only up 2.4%. However, if you look at milk production, milk on a volume basis, we've grown as an industry from 162.6 billion pounds to 225.9 billion pounds, essentially a 39% growth rate. However, a paradigm shift has happened from 1945 to about 2010. If you talked milk production or you talked milk component production, they were one and the same. That's decoupled. from 2011 to 2024. If you look at USDA data on milk production has grown 15.9%. Let's just call it 16%. However, during that same window, milk components, and when we're talking milk components, we're talking butter, fat, and protein, has grown 27.2%. And this is stretching over time. So there's 11.3% difference in the growth rate to the higher advantage for milk components, butter, fat, and protein. Big part of this driver is butter fat production. This is an awesome data set stretching back to 1924, the first time USDA looked at milk components. And so we have butter fat content all the way to 2024. Butter fat in the Pioneer America through World War II peaked at 3.98% in 1944 and 1945. Remember, the #1 dairy product back then would have been butter, the product, and then fluid milk. Cheese was kind of a small player back in those days. And then the markets changed, and from 1966 to 2010, butterfat held in this tight little window of 3.65% to 3.69%. And then in 2010, everything changed, and we've had 4 years in a row of record butterfat percentages in our milk supply. So that's what's being shown in this chart here. Looking at this from FMO data, Federal Milk Marketing Order data, this is a big stair step, just as comparing 2020 to 2024. And you can see the shift in the monthly data. It's July right now when we're listening to this webinar. Components are bottom out during July. A lot of this is driven by heat stress, higher temperatures, higher humidities, and then we'll see a climb here in the monthly data again. My teammate Abby would encourage me to include 2025 data here. And again, we're seeing a record stair step. So in January, we had 4.43. So if you started that new data trend in 2025, it's up over the 4.4 mark. We saw that in February again. And through May, we were at 4.2% on butterfat. Protein is much the same. Now, butterfat, we can change through genetics and a lot through feeding programs. Protein is more a biological deal. There are some things we can do in nutrition, but protein is also up in January. We were over 3.4%, and we held that way in February, and now in May we're at 3.3. So later this week at week's end, we'll have June component data coming out here as well. Let's look at what this looks like comparing 2001 to 2010, if we can have the next slide. And you'll see this is, again, when we talked about milk production and protein and butterfat and combined butterfat and protein, everything held in this tight little window of 3.8% variation to 15.4%. So again, we were talking about one and the same, and then everything changed in 2011, and this trend is accelerating. So milk production during the last 14 years is up 15.9, we'll call it 16%. Butterfat's up a whopping 30.6, protein up 23.6, and combined components, protein and butterfat, that far right chart, is up 27.5%. So if we have the next slide, you'll see that difference there. And really what we started out with this story here, calling out the difference in milk production and butterfat. And why does that matter to your milk checks? And that's what we're going to dig into here shortly. So this is looking at the change in milk production year over year. So if those blue bars are below, actually, this is monthly milk production year over year, but if those blue bars are below the 0%, that means milk production was down. Just in the recent months have we seen some growth in milk production in January through May data. And it's important here, we're going to splash a little bit of story here. Why was milk production down in those recent months? Certainly was an impact on HPAI, but we've had 57,000 milk samples run on highly pathogenic avian influenza since May of 2025, just in the last 60 days, and we've had 2 positive tests in the last 30 days. So we're going to see some growth in milk production again. But when you look at those green bars, that's the growth in milk production, or milk component production, again, butter, fat, and protein. And that's very important to our nation's processing plants. In our next slide, we will see the change in year-over-year data. The big thing I draw everyone's attention to, the last 3 years here on here, 2024, 2023, and 2022, no growth in milk production. But when we add the green bars in here, dairy component production is growing, and that's what really matters most coming for dairy farms, driving milk checks and driving what's taking place in processing plants. What is that doing for dairy product production? This is a chart on cheese. So for almost everyone's generation while they were alive, from 1945 roughly to 2010, the thumb rule was 100 pounds of milk makes 10 pounds of cheese. But if cheese is driven by components, we've seen on a standard cheese yield formula that a 12.5% improvement in the past 14 years on the amount of milk or cheese that's made from milk. So now the average 100 pounds of milk makes 11.4 pounds of cheese. So we're getting more efficient. If you're looking at a carbon footprint or green footprint, dairy is a lot more efficient these days because of the milk we're sending from our dairy farms. We're going to look at one other dairy product here, butterfat, and that's even higher. And it stands to reason because butterfat is growing at a higher rate than protein. So 100 pounds of milk previously made 4.4 pounds of butter, and now we're at 5.1 essentially. That's big time growth. And I'm going to stop there as we talk about butterfat, butter production, and cheese production. I know there's viewers out there, whether they're dairy farmers, nutritionists, or in the processing community. Some cheese plants are saying, don't send me more butterfat. Well, that's part of the story. If you're making Italian style cheese, many of those are low fat. You're skimming the cream off and selling the sweet cream because you don't need that. But more and more dairy processing plants need to look at standardizing their milk and not necessarily putting all that butterfat in the cheese, especially the cheddar and American style cheeses. So in the next slide, this, we're growing the milk supply. We're growing the milk component supply, but these are the products, and on a full fat basis, that means the butterfat's in there, because there's another way of looking at that, skim solids, when you take the butterfat out. But cheese now has moved from 37.7% to 42.2% of the US milk supply on a full fat basis. Then you add butter in there, and it moved from 16.3 to 18%. And we have a number of other products. Sour cream is up 1%. Fluid milk is down over time. Frozen dairy, even though it's National Ice Cream Month, ice cream sales are down slightly. And then a big group of dairy products in the next category there. So with, go ahead, next slide. When it comes to our milk checks, I tell people this is 90% of our milk is in the federal order system and priced on federal order components. The only parts of the country that are not priced on milk components are Southwest. So if you're in the Appalachian order, if you're in the Southeast order, if you're in the Florida order or Arizona order, you'll be under different pricing scenarios. But all the rest of the country, 90% of the milk supply, over 90% of your milk check is butter, fat, and protein. And for those who like NASCAR or Formula One races, I consider butter, fat, and protein 2 race cars on the track. Right now, butter, fat's in the pole position and leading in contribution to our milk checks, but protein has its moments, and protein will once again pass butter, fat at some point in time because consumers are demanding more protein. The whey in our milk is so valuable, and high protein whey is selling at record prices. These are the things to keep in mind as we talk about our milk checks. And at that, I'm going to turn it over to Abby.
Corey. So right now in the dairy industry, we have an unprecedented $10 billion worth of investment going into dairy processing. And this map has been accumulated over time with all of the new and recently completed plants coming in through 2027. So this is where that $10 billion is going into. We have split it out by milk class. So we've got fluid beverage milk in the light blue dots, soft dairy products for class 2, so think yogurt or sour cream, cottage cheese, that's in the green. And then class 3 for cheese and whey is orange, and then class 4 rounding out butter and powder as the yellow dots. And so you can see it's pretty spread across the United States. We have quite a bit of cheese capacity coming in through the central third of the country, which is pretty exciting. And one thing I really like to point out here is that in these light blue dots, there's a nice crescent moon shape happening here from Texas into Missouri, Ohio, and up into the Northeast. And a lot of these fluid beverage plants will be producing extended shelf life or ESL milk. And that will be distributed here amongst the Southeastern consumers. This holds over a quarter of the US population. And so then they could have milk that stays on the shelf for a longer period of time for all of them to enjoy. But the main gig here is that dairy is doing incredibly well and a lot of investment is going into place. And we will see that coming online here in the next couple of years. So with that, into our second segment, talking about consumer demand, we see that consumption has been on the rise for the most part since the mid-1970s. And we're sitting at a tied record in recent history between 2021 and 2023 at 661 pounds consumed per capita. This is on a milk equivalent basis, so this is all of the fat, of course, included in the milk. USDA has a pretty unique data set because they have data that goes back to 1909. And back when Corey was talking about earlier in the 1940s that consumers were eating a lot of butter, that number of total dairy consumption was sitting, the record is 850 pounds per capita on the milk equivalence basis. So we have a long way to go to get up to that number, but consumers have a wide variety of dairy products to consume today, and we expect this number to keep moving up and to the right on this chart. When it comes to what we consider the big three, this is where we see a lot of growth happening. In particular, cheese has been a very large driving category, as well as yogurt and butter. We've seen over 40 pounds consumed of cheese per capita here in the United States in 2023. And I think that there's definitely upside potential when we compare to especially countries in Europe. They're over 50 or 60 pounds. So the opportunity is definitely there. We've seen a rise in consumption with regards to yogurt, especially for younger consumers or the general population looking for better for you products, as well as a little bit in that GLP-1 market. Yogurt is the #1 product that those consumers are going for. So I definitely see that line going up and to the right. And butter is slowly but surely moving up. Consumers have realized now in recent history that the flavor is found in the fat, and butter is there to be able to supplement ingredients to virtually any meal that you could think of.
And while we're on that slide, if we jump in here, that study that Abby was talking about, Cornell study was published in January this year, looked at over 40 different food categories. So these GLP-1 weight loss drugs are curb appetite, right? You lose or consume less calories because your body feels more satiated or full over time. Yogurt projections, there were only 4 groups that looked foods that looked like they were going to grow. One was nutrition bars, which whey protein is a major source. Meat snacks was another. Reserve grand champion on that study from Cornell would have been fresh vegetables and fruit, and the grand champion is yogurt. And there's so many positive attributes now documented that yogurt is very good at curbing diabetes as well. And then when you talk about gut health, and so those are all building blocks on top of what Abby talked about on the protein.
Really good points, Corey.
One of the things here, consumers have been facing inflation, and it's impacting how dairy sales have been taking place. There's a lot of cheese consumed away from home. Think about all the pizzas and pizzerias, the mozzarellas and the Italian style cheeses. And then if you go to quick service fast food, how many cheeseburgers in the country have a piece of, or excuse me, burgers in the country have a piece of cheese on it. And that trend is even going into chicken. So if consumers pull back on spending a little bit, the dairy patterns change where they're consuming food. So this is showing the percent change in the consumer price index for all foods. So it's something to be watchful of. But again, the May data that just came out saw that cheese disappearance, both at home domestically and in retail, and export was all up. So that's a very good sign. Recently this year, back in February, I had the opportunity to speak at the USDA Ag Outlook Forum. And in the next slide, I saw some incredible information. Megan Schweitzer from USDA ERS put this slide together, and it looks at consumers by quintiles. So a quintile would be 20% segment groups. So if you look at the highest quintile, these are people that spend $17,000 a year on food, but they're only spending 8% of their disposable income, 8.1. That's shown in the lower right there. So this group of people habits aren't really impacted by inflation. But when you look at supplemental nutrition assistance programs, SNAP, which have been talked about at libitum here in the big beautiful bill that just passed Congress and was signed by the president, consumers in that lowest income quintile, so the ones, the 20% lowest income consumers in this country, they're just spending $5,300, $5,300 on food, but that's 32.6% of their income. So they are going to be a lot more cost sensitive when food categories up. Now, eggs, inflation, which is dominating the headlines till about May and June, egg prices are down 7.4% month over month. So that is calming a little bit. Dairy prices are calming. So these things change how consumers buy food, and especially how they, whether they're going to eat at home or go out to restaurants. And you can see how the other quintiles are impacted. And I think this was this was a big aha moment for me seeing this data, because not all consumers are the same. And this drives our milk checks, how these different consumer groups eat their dairy. And we're going to turn it over to Abby and drill a little deeper into this.
Thanks, Corey. So some of this data is really interesting, especially from the Kansas State University Department of Agricultural Economics. They publish what's called a meat demand monitor once a month. And this survey question in particular, I've always found the most interesting, is that they ask consumers, what do you value when you go to purchase proteins? And of course, based on the name, the meat demand monitor, this is in reference to animal or meat proteins like beef or pork or chicken, seafood, and things like that. I think this also applies to dairy too. And if you look at the top segment, the top three, and even at the very bottom, taste, freshness, and price are almost always the top three things that consumers value when they go to purchase proteins, which I think is pretty impactful. That if the product doesn't taste good, or it's not fresh, or the value is not there for whatever the price is listed at, then they aren't going to be a repeat buyer. And as you go down the list to nutrition or convenience and some of these other labels that we've seen, like hormone or antibiotic free or animal welfare, if you go down to the very bottom and see environmental impact, I think sometimes we can get a little bit washed with the news that there's a lot of talk about sustainability and we need a sustainability label on these products, but what does that really mean? But at the end of the day, at least based on this data, it doesn't appear that this is at the forefront of minds for consumers when they go to purchase proteins. And I think that's pretty impactful for all of us in the dairy industry, especially considering that I feel like we fit very well in the top three, that we have products that all taste incredible. They're extremely fresh, to Corey's point earlier, that we are harvesting milk every single day. And then you get what you pay for, and honestly, probably more. So it definitely exceeds expectations, and the value add is there for the price. So this is just something to keep in mind as we talk about consumers and what are they looking for when they go into the grocery store. A little bit shifting from domestic into the international front. Roughly 17% of total US milk production it goes to the export market. And we have monthly data here based on data from the US Dairy Export Council. And currently in 2025, we are fairly close to where we were in 2023 and 2024 with regards to exports. So we send quite a bit of milk overseas. And our top customers include Mexico, Canada, China, Japan, and South Korea. One of the really big stories last year, and I think this is going to be another big story again this year, is the amount of cheese that we have exported on an annual basis. So in 2024, that was the first time ever that we exceeded 1 billion pounds exported in 1 year. And just of note, so far this year with data through May, we've delivered over 500 million pounds of cheese. So it's very likely we will be over the 1 billion pound mark again this year. Of course, it helps that we have discounted cheese prices with regards to the European Union and New Zealand. But of course, a good US dairy product is clearly doing well overseas. And I'll shift it back to Corey to talk about the butterfat market.
In building on what Abby just shared, May's cheese exports were a record 114 million pounds. So that passed the record back in March. Now, the big three exporters in this order are the European Union. And European Union collectively exports 20% of their milk production via dairy products and ingredients. Then there's New Zealand, a country with just 5 million people and about 5 million cows, roughly in a geographical space of Wisconsin and Illinois. And then there's the United States. And dairy's been a really good story here collectively as well. There's a lot of coverage in the headlines right now that U.S. agricultural exports and imports, we actually have a trade imbalance. We're bringing in more into the country, but dairy's positive. So last year we exported $8.2 billion worth of dairy and only imported $5.4 billion. So we're positive. We're contributing to the national economy by $2.8 billion surplus. Now, some people will argue, especially this spring and early summer, that we had too much sweet cream, that processors would say we were sending too much butterfat from dairy farms to our processing plants. There's an ebb and flow to this. I have two counterpoints here to indicate that there's still more upside for butterfat production in the United States. This here is data from USDA Economic Research Service. And in 2011, we, the United States of America, imported 10.2 million pounds of butter. By 2021, we imported 100.5 million pounds of butter. A lot of that from Ireland, about 65%, and the next from New Zealand. And this past year, we imported a whopping 172.6 million pounds of butterfat. So what that tells me is we have upside to make more butter, the product, and other products in this country. So I'm bullish on butterfat yet. Do we need to grow it as fast as we are? Maybe not, but there's market opportunity here in the United States. And then the next slide, I really like to talk about our butter exports here. So in the United States right now, the US dollar is down about 10% on a value to many of the other world currencies. So US dairy, US anything is selling a little bit of a discount, and that's helping overcome this tariff situation. When we look to butter the product and anhydrous milk fat, those are the two main products that get exported off our shores from the butterfat category. January through May, we've already exported 88 million pounds. That means we've exported 89% of what we did all of last year in 2024. So here's another opportunity right now, near term, for dairy. And I'll turn it back to Abby.
Actually, Corey, we're going to keep going with you to talk about cull cows.
We're going to now talk about cattle inventory here. In the last 97 weeks here, that's dating back all the way to Labor Day, we, the U.S. dairy farmers, have pulled back on culling by 608,700 head. So we're comparing the most current week to 52 weeks ago, the same time last year. So, and so far this year, we're just at 100,800 fewer cows. That's a big number. Why is this taking place? Because fewer heifer replacements are leading to fewer cows culled. And it's really reshaping what's taking place on our dairy farms. This is, the next slide is a little deeper data into what that's looking like here. You can see the 5-year trend line here in dash. That's what normally happened prior to this dearth of replacements, so lower replacement numbers. And now you can see the shift. The powder puff blue line is 2024. And again, we're trending lower through 2025. The lines are coming a little bit closer here in recent weeks, but the trend is clear. The trend is impactful. The next slide, genomics here is making big inroads in the United States. It's one of the drivers. It's one of the reasons that component levels are increasing significantly in the United States compared to countries like regions like the European Union. Jerseys and Holsteins have big population bases. We can pretty accurately predict what a baby calf will do with big accuracy, with 70% accuracy as a cow. And by most of the data points now, 20 to 25% of the newborn heifer calves in this country are being genomically tested. And you can see that growth in the next slide here. Hoard's Dairyman was the first public source to talk about genomics way back in 2008. The test became publicly available in 2009. A lot of it was first used on bull calves to select the next generation. But we saw an inflection point in about 2017, 2018, when a lot of farms started testing their females. And we're learning more again about our dairy animals, and that's impacting our milk supply. It's impacting our milk component. And this alone here is one of the big reasons we are able to shift our what our dairy cows are doing. I had the opportunity to present at the USDA Ag Outlook Forum with Jonathan Lamb, and he put up a slide comparing his first lactation, second lactation, and older cows. This is a Holstein herd in New York and Ohio. And Jonathan's 2-year-olds and 3-year-olds were averaging 5% butterfat on the whole lactation and a 3/6 protein. And to show how much that shifted, his 5 lactation and older cows, same herd, same nutrition, different genetics, were running at about a 3/6 butterfat and a 3/2 protein. That is how quick the generations have turned on the farm. In the next slide, not only do we have genomics changing this on the farm, well, we got to talk replacements real quick. Yeah, this is the replacement levels here on USDA data and January data. You'll see the powder puff blue lines are replacement heifers. Those are all heifers that are 500 pounds and over. That's the metric USDA tracks. And then the dark blue bars are those expected to calve in the next 9 months to a year. And you can see those numbers have shifted down and the price has gone up. Now, USDA's number has it at 22,870 in April data here. And end of July, they'll have a new data point. They release those every 90 days. However, in the marketplace, people will know that sale barns in Turlock, California and Pipestone, Minnesota have routinely shown the top replacements now going at $4,000 per head and higher. That just shows how short we are on numbers right now to fill the pipeline. part of that has been changed because of beef on dairy, and you can see that line in 2023 and 2024. There were 7.9 million units of beef semen sold to dairy farmers. That's flatlined a little bit because of the previous slide, because we don't have enough replacements. And you can see gender sorted semen in the industry, we call that sex semen, is continues to grow. That's almost 68% of the semen sold now to dairy farmers, and we're quickly reaching a point that the two main semen products that will be sold to dairy farmers are gender sorted dairy to make a heifer calf and beef on dairy. You can see the slide from just 5 years, from about 11.5 million units of conventional XY semen, random 50-50, make a heifer or bull calf, and now that number is barely hovering above 6 million, almost cut in half. In the next slide, we'll see that a little bit deeper here, and you can see conventional semen's now at 6.2 million units, and it ranks a distant third on U.S. dairy farms, and it's going to keep shrinking. It's going to keep shrinking quickly because the value of that uterus is so important. You know, to my nutrition friends out there that are thinking about this, and as you look at milk checks, you know, we've been talking about getting 7 pounds of milk components on our farm, milk components again being butter, fat, and protein. But what we got to consider now, if $2 to $3 per hundredweight or 20% of our milk revenue on farms is now coming from beef on dairy, cull cows, newborn calves, the value of the uterus, the value of a cow's ability to have that calf is contributing so much to our return on investment in dairy. We may have to nudge back on that 7 pound metric, because if that calf is worth a lot, we might need to keep a little bit more marginal cow, because that threshold of profitability is diminished because beef on dairy is climbing. And Abby will take over here and look at some of those trends.
Yeah, so we'll dive a little bit deeper into these domestic beef semen sales. So to Corey's point, in the past 2 years, we've seen 7.9 million units of beef semen sold to dairy producers, and that number has come up. The graph almost looks exponential since 2014. That this is total beef semen sales, so not just to dairy producers. That's why we got the little call out there. But the number was relatively flat. And then we start seeing this trend of using beef semen on dairy cows start to come into play. And I think it's done very well for the industry. I'm curious to see how this starts moving forward. And maybe this is something Corey and I can talk about a little bit later, that, you know, we have sex semen for dairy cows to produce a female replacement heifer. Could we be getting to the point here over the next, maybe within the next decade, that we could have sexed beef semen to create beef on dairy bull calves? So that's something that we could be looking forward to in the industry here. Technology is changing and advancing every day, but I think that this trend is here to stay. And what this populates to later on is that if we look into the total feeder cattle supply, and this data is from, the outlook is from Cattle Facts with the data from USDA, and if you look at a fed dairy diaper animal in the feeder cattle supply, that number was sitting between 3 and 3.5 million head over the past almost 20 years. And then we have this introduction of beef on dairy calves coming into the mix. And so that's where that green bar starts to come in. And now that we've seen such a growth in that type of animal, that Cattle Facts is forecasting for 2024 and beyond that over half of the dairy related animals in the feeder cattle supply are going to be beef on dairy crosses. So this is something to keep our eyes on, and we'll see how this shifts here in the near future as we see more dairy cows being bred to sex semen, but beef on dairy still being ahead of conventional. And when we talk about overall cattle inventories, they are continuously on the decline. We're sitting at about 87 million head as of the total cattle inventory from back in January of this year. We have the smallest beef cow herd since 1961. And a couple of the primary reasons why we believe that this rebuild of the beef cow herd has not started yet have been for a variety, but the top two that we've really been focused on are record high calf prices and then poor pasture conditions that are delaying this rebuilding. And if we look at data dating back to 1970, we peaked in the cattle inventory back in 1975. And the other cattle and calves, you can think of this as everything that's from replacements to feeder cattle to cattle that are going off and being marketed for slaughter. The green bar is dairy cows, and then the dark blue is beef cows. And tying back to the beginning of our slide deck today, when Corey was talking about how the dairy cow herd really hasn't shifted all that much over the past 25 years, it really hasn't. If you see that the green bar is pretty flat, like the number or the width hasn't really changed probably back since the 1980s. You can see it thickens up just a little bit there, but definitely not as drastic of a change as what we've seen in the number of beef cows. And it's a little tough to see here, but there are some peaks and valleys happening, and I'll talk about that in a little bit more detail here in the next couple of slides. When we talk about cattle futures, this really declining supply has caused futures prices to go up. And this is just over the course of the past year. And as you can see, in July of 2024, cattle futures were sitting at about $190 a hundredweight. And that has really started to ramp up, especially in 2025. And this data pulled it last week. We're sitting at about $230 a hundredweight for live cattle. So that's a pretty drastic difference in just a 1 year time frame. But this goes back to a simple supply and demand issue. If you have low supply and high demand, which we've had really high beef demand lately, then the price is going to go up. The same can be said for the replacement heifers, that if they're in low supply and high demand, then the price is going to go up.
And while we're on that slide, Abby,
Sure.
just this past Friday, prices for lean beef, lean ground beef, so this is 90% or higher lean, went to $400 per hundredweight, or $4 per pound. That's a new record. These are the lean ground beef would be the product that's landing up in hamburgers and quick food service. And that's largely driven by dairy cow slaughter being down 7.2% so far this year, and beef cow slaughter down 17.4%. So beef cow slaughter is down, which means we might be seeing an uptick here in rebuilding the herd. But Abby can carry on.
Thanks. So that is something we are definitely keeping our eyes on with regards to when is the beef cow herd going to rebuild. We're sitting at about 28 million head. And as you can see, our most recent peak was in 2019. We've been liquidating the herd since then. And if you look back at the most recent end of the cattle cycle, so when we stopped liquidating and started rebuilding again in 2014 and 2015, that we had already seen the peak calf price. And now we are sitting at over $400 a head $400 a hundredweight for recent calf prices with regards to USDA data. And we still haven't really seen a bunch of big signs for retention. We've heard anecdotally that some regions or some pockets are starting to hold back heifers for rebuilding. But if you think about the cattle cycle, the same thing in dairy, that gestation or pregnancy is 9 months long, and then you have to raise the calf, and it's still 2 years for her until she becomes a milk cow, regardless if she is dairy or beef. And so we are expecting the beef cow number to hopefully start ticking back up in 2027. So these things take time, and hopefully we can start a rebuild here soon, because who knows what the peak price will be moving forward before we start again. All right, looking ahead, we're going to talk a little bit about feed and margins. So soybean meal prices, honestly, all feed costs have come down extensively over the past couple of years. When we look back into early 2023, we were sitting at about $500 a ton in soybean meal. That has dropped now to below $300 as of May. Same thing for corn, sitting about $6.50 per bushel. And now USDA data shows in May it was about $4.65, and the futures prices recently for the nearby September contract have dropped and are near $4 per bushel. And the same thing can be said for alfalfa and hay prices. Those are also coming down. They were pretty high back in 2023, even in 2022. But as you can see, the lines are moving down and to the right. This is something really important that we... Go ahead, Corey.
If we go that corn slide one quick time here, some people know I also run a farm after my father's passing. This is a time when I was in the 80s and 90s, when I was a kid and a college student, the adage was you needed four-legged and two-legged animals to make corn and soybeans profitable. We're at that point again. And it's really to do a value-added protein. If you're looking on the buy side, it's a great time to be a dairy farmer or a cattle rancher or running a feedlot. 74% of the corn crop as of last Monday, new report will come out today, but 74% of the corn crop right now is rated to good to excellent. And USDA is projecting what would be pretty much a record 181 bushel yield on corn. And the soybean crop is looking equally great, 70% good to excellent, and that's really close to the long-term average. And when Abby is talking about soybean prices, the crush was up, the soybean crush is up 5.8% last month. So really, because of the biodiesel and biofuels, that oil is almost worth more than the soybean meals. So that's good news for farmers. That's good news for building rations, and it's going to drive really the feed costs here moving forward as long as weather holds. And right now we're having some. I know that farmers in Eastern Ohio and New York State have struggled to get their corn crop in, but if you drive through the Corn Belt, corn is looking fabulous.
I could definitely second that. Being here in Minnesota and traveling down to the border of Minnesota and Iowa nearly every weekend, the corn and soybean crop is looking absolutely fabulous. So I'm hopeful for the crop producers this year. But we definitely focus on all of our feed costs, especially because this is the largest expense on any livestock operation, including dairy. And so this is something really important for all the dairy producers that we like to stay focused on. And with regards to that, when we're talking about dairy margins, this data is from the Dairy Margin Coverage Program. So this is income over feed cost. They take the all milk price less corn, soybean meal, and premium alfalfa hay. This does not include any other revenue streams or expenses. And they do an income over feed cost margin. And 2024, we saw the record back in September. We were knocking on the door of about $16 a hundredweight with regards to IOFC. And now we're still above the threshold that would begin indemnity payments. So 2025 should still be a good year. And the reason why we talked about feed costs going back to 2023 is that in this chart in particular, you can see how far below that $9.50 threshold for indemnity payments went. And it was tough to be a producer at that time when feed costs were just outrageous. And so now that things have leveled out and started to stabilize, we can see that margins are still going to be positive here in the near future and hopefully should be moving up through the rest of the year. Finally, the key themes that Corey and I would like to leave with all of you today is that we believe dairy is a growing food category. There's a lot of upside and potential that we see with regards to what consumers are looking for better for you products, the value add, things that taste good, that are fresh, and that are worth the price. We've seen a historic growth in milk components. Corey talked quite a bit about this earlier on in our presentation, that we've seen exponential growth in butterfat and protein, and we expect that moving forward. And finally, beef brings more to dairy. We've talked a lot about beef on dairy here recently. It's definitely a big trend, and we believe it's here to stay. So with that, we'd like to say thank you. Corey, do you have any final thoughts before we turn it back over to Kylene?
That's a great summary, and looking forward, if you have questions, to go ahead and type those in the GoToWebinar control panel. Kylene, back to you.
Thank you, Abby. Thank you, Corey, for that excellent presentation. Just a reminder, if you wanted to view this webinar or any of our previous webinars, you can visit the archives at hordes.com/webinars. And we hope you'll make plans to attend our next webinar, which will take place on Monday, August 18th at noon Central Time. And please note this is again the third Monday of the month. We'll have John Geiger of Progressive Dairy Solutions discussing making the most of this year's corn silage. And then in September, we'll cover HPAI, which we touched on today. Now we're going to turn it over. We've had some questions come in, and I just wanted to ask you a couple of these that have come in, both Abby and Corey. The first one we had was, what is happening in the canola market that is causing the drop in price?
I'll be candid, and we'll see if Abby has anything here. I don't follow the canola market as much, but I know that canola market, that's a lot of that's produced in Canada and grown in Canada. The U.S. does have some growth or canola grown in North Dakota, Montana, and up in that region here. But there's a lot of things going on back and forth right now with tariffs and the border here. So that's largely a Canadian product. Now, I will say this as well, a lot of these products are hitched to one another. And if we're seeing a downward shift here in soybean meal prices, if you want to move and you've got inventories of canola, you're going to have a price shift. But I'm probably on the edge of the line there to speak any more on that one. Abby, anything on that?
I don't have any thoughts there. I think you summed it up nicely. We do have some teammates that help cover this area, so if you'd like some more information, we could get you connected to learn more.
Great. You touched on exports. Where do you see the cap for dairy exports, or is there a cap, a max that we see?
So cap, I won't use that word, but there's a lot of ebbs and flows to this right now. There's a lot of opportunities. Mexico is our #1 customer. They've been a big buyer of cheese, non-fat dry milk over the years. We have free trade agreements in Central America now. So they basically are tariff-free in those countries, Central America down to Colombia, also the Dominican, and that region collectively is a $500 million market. Now Mexico's over $2 billion, but it's when you put all those little countries together, that's a big opportunity just from a sheer population size and the average income levels in consumers growing in Southeast Asia. That's an opportunity as well. You know, we're going to see some really unique things happen in the marketplace right now just because of what I call tariff tribulations right now. You know, even though Mexico was down a little bit in May, I'm just looking at the data here. Japan was up 24%, South Korea was up 20% in May, Central America up 23%, and Latin America, South America up 47%. But there's going to be some opportunities here for a number of products. I'm bullish on U.S. exports. We're bullish on it for a number of reasons, and it's part of that is also that $10 billion number coming in on plant investment. Europe really can't grow for a number of reasons. Canada isn't growing because of supply management, and so there's processors that are coming and investing also here to grow international sales. So those are some of the reasons here, and Abby digs through the data quite a bit too. So Abby, what might you have to add there?
I think for me at the end of the day is what is the economy doing? The US, these other countries that we're trading with, how are their consumers reacting? So we saw a really big push to cheese to Mexico last year, and we saw the Mexican population, they're doing well with the economy, and so we're sending more dairy products there. And I think that's what it comes down to at the end of the day, that, you know, we talk a lot about China, and they are trying to recover their dairy industry a little bit over there. And they're experiencing some macroeconomic issues. And so we've seen fewer dairy product exports going into that region. And we've seen that shift into other countries. So I don't think that there is a cap on US dairy exports. I think at the end of the day, it comes down to who has the discretionary income and where can we send the product to, because I think there will always be demand for US dairy, both domestic and international. It just comes down to who has the money and is willing to spend it.
And we do need to talk about China. China imports about 40% of US whey, and I'm talking whey that's 34, 40-ish% protein, and 40% import levels. That's a big number. And there's currently, as of May, a 35% tariff on that. So we've seen a cliff fall off on sales to China right now in the recent data, and that's something to be very, very watchful of, because you just don't replace those markets easily. China is the world's largest dairy product importer, so that's an area of concern. They're not deep in some areas in terms of market share, but that one is a very, very big one.
Great, thank you. This might be a question for Abby. It'd be really interesting to know if there's a trend over time in the meat demand monitor. And this person expanded, was the sustainable environmental impact always so low, or are we getting numb to it? That's the question.
That's interesting. I would definitely have to go back and look into the data over time. I think what this eventually comes down to is that it's going to be a niche market. And what I mean by that, and I feel like organic can be a nice analogy, is that we saw this really big push for organic products and we still see them in the grocery store. However, that is not geared towards the entire audience of consumers, that it is a portion of the market share. So I think with regards to any kind of sustainability labeling or marketing about sustainability, that it will be for a niche market. You will have consumers that will actively look for that, but I don't think that is going to be the general population that's actively going to seek it. So I think that's why it's so far down on the list, but I can definitely go back in the data and see if that's always been the case.
Great. Question coming in, if I have a dairy cow, should I be using beef semen that's clipping $1,000 or sex semen for a heifer that will return on my investment 2 years later?
Here's a good economist answer. It depends. I'm going to back out of that question for a second, and then we're going to come back and answer it. Why are beef heifer inventories not growing in the United States? So if the average beef livestock producer, an average cow-calf operator is 50 or 65 years old, and in dairy, it's the number is average dairy operator, at least the head of the business, is 58. If I'm on a historic run and my animals have never been that valuable and I have nobody standing behind me to take over the business, I'm going to keep cashing in my poker chips. I'm going to keep cashing in those checks, and I'm going to send some of my beef heifers to slaughter, feed them up. It wasn't only 2 years ago that a dairy heifer, a dairy replacement heifer, was worth more almost in a feed yard than she was in a dairy barn. So to answer that question, what is your business model? What is the dairy farmer's business model? Are you going to be in it for the long term? Are you going to be growing? Because at this point, if you have a loan and I'm your banker, I'm going to say, geez, we need to plan for your next expansion and start making our own replacements at this cost. 2 years ago, when you're paying $1,600 a piece for choice and privilege, well, you can go buy those on the open market. So I think the answer is it depends. And if you have enough replacements, then you should be making a beef on dairy calf. But what you can't do, Abby and I are working on a paper here. It's going to come out here in about 6 weeks. The next 2 years, you saw the semen sales data. We're going to have less replacements coming online in 2025, this year, in 2026. It is not until 2027 that we're going to see a growth in dairy replacements, and that's going to be after years of declines here. And our preliminary numbers is maybe we'll have 250-ish 250,000 extra replacements compared, but that's the baseline of the previous year. So if you need replacements, you got to run the math and really see what semen product you should be using. Now, I'd advocate that if beef on dairy is worth that much, I'd be using all the sex semen I could, gender sorted semen on my 2-year-old heifers and 2-year-olds, and then, really maximizing my return on revenue. Abbi, I'm sorry I jumped all over that one. I was kind of excited about it. Did I miss something?
No, I think at the end of the day, you answered it very simply. It depends on the business model. What are you looking to do? Are you in it for the long term, or are you ready to get out and then sit down from there and decide who is going to get bred to what?
Great
because
answer.
you can extend your career. If I'm going to retire, I could, from dairying, I can sell my milk cows, and I got multiple years of this revenue here too, and you could transform it into a beef enterprise as well. So there's so many truncated responses to that one.
No, that's great thoughts and great answers. And just in the interest of time, I'm going to weave these two questions into one because they're related. Well, I'll ask them both and let you kind of answer them. Are there any U.S. butter plants that are working on making a competitor to Kerrygold butter? And the next one is also about Irish butter is higher in fat, but the price is higher in Costco. So why do we buy Irish butter?
Well, I had the opportunity to speak at the Dairy Practices Council 2 falls ago, and I had some Irish dairy farmers there that came up and said the Irish dairy farmers would literally cut off their right arm for unabated access to the U.S. market. Butter, the product is in vogue. There's a lot of multiple layers to that. There is investment going on in U.S. butter manufacturing. Let's start with that. Now, let's look at the different butter products too. If you're largely in Ireland, cows are on pasture. So you have the pasture-based cows have higher conjugatic acid, CLA. That butter has I'm gonna get this right, it melts easier, so it melts more quickly. So it has a little bit different flavor profile. So there's some positive attributes there that they're making inroads in the consumer market. Now, on the flip side, we're making a lot of butter from our farms as well. And I think there's opportunity in restaurants and in other areas in manufacturing. For example, if you're making laminated dough, which is something we don't talk about much in dairy circles, and until I got to CoBank, I didn't study up on laminated dough, but think of croissants, think of other pastries. So you laminate the dough, you have a layer of dough, you have a layer of butter fat, you have a layer of dough, and in that higher melting point of the US butter will gives a different flavor profile, allows more air pockets in, it improves the flavor of the product. So there's different places, and it has a whiter color versus the Irish butter. And so there's some opportunities in the manufacturing space. There's opportunities to win. And there are some butter manufacturers out there making US ones that were even featured in the Wall Street Journal that are making some high-end butters that are doing very, very well in the sales case. This is a different way of selling. You got to sell higher, put higher butter fat levels in the product. And if you don't sell it, now you got to think about this like a farmer. If you don't sell it, if you're a processor and don't sell it, then you got to sell at 80% level and you're giving it away. So there's an ebb and flow of this. We're still stepping up. I think we're moving in the right direction, but these are not light switch decisions and outcomes.
Fantastic. I don't know if Abbi, anything to add there?
Oh, nothing else to add. I think Corey got it.
I'm passionate about butter.
I know you're passionate about butter, Corey. Great. Well, we are running short on time here, so we'll wrap up. But I really want to thank you for your answers, both Corey and Abbi. That was fantastic in the whole presentation. And thank you to our listeners. We appreciate the time you spent with us today, and we hope to see you in the audience in a future webinar, or if you like to tune into our Hordes Dairyman podcast, it's available on YouTube or your favorite podcast player. Until next time, goodbye from our team here at Hordes Dairyman. Thank you.